Hey guys, today's the last day of the month, 31st of January, and I was just taking a bit of a look at gold and just kind of working out what I wanted to do with how I was going to trade gold this week, and came across a pretty interesting move here. So it's a really good setup, very high probability, very profitable, short-term profitable trade as well, like I've been trading gold for some time, and it's once you start to see the patterns, and because when you look at it so much, you start to see the patterns that appear, and it's almost repetitive. So I just want to quickly show you what gold has actually done. So the peak at being at 1900s. Since then, it's clearly in a downtrend. Okay, and we've pretty much got a harmonic move to the downside. Okay. But gold is at an interesting level, very interesting level. It's it's still in a downtrend. Technically, it'd still go down, like I've been saying before. But we are looking for a potential break. All right, but that's still a fair way away from now. But I want to show you this short-term trading opportunity here. And so we've got price action. Kind of, I won't go through the further to the left. I'll just start from here. So we've got price action. Making a new structure low, then a lower high, and then a new structure low, and lower high, and then we've got a new structure low. Okay. Now, at this point, assuming that the trend continues, then we should expect another move up to around somewhere around here. All right, assuming that that's going to be the case. All right. But in the short term, right? In the short term, this is the daily time frame, by the way. In the short term, I expect to see a move down. Okay, I expect to see us go down to around here. All right. Now, when I was looking at this morning, I thought I had to find although I know it's going to go down to around this level here, I still need to find evidence of that. Okay, still need to find some kind of fundamental or technical information that's going to tell me that it's going to be, it's going to go around to that level. So, going down a 4-hour time frame, I had a look. And straight away I can see that we had a pattern setting up, okay, potential pattern setting up, right? And with that in mind, I was, let me just measure this out first to make sure. Okay. All right, so we definitely got a pattern here, right? Meets all the rules of the cipher pattern. And we've got X to A to B, B to C, and C to D. Completion of that right there. Alright, so that's where the pattern completes. Alright. Now, this one's actually a high probability setup because if you look left, there's a lot of structure, a lot of resistance, right, which has turned into support. Right, it's here too. There's a lot of choppiness in there, so we do know that this is a pretty good area. Based on this pattern here, right, initially we're looking at, if we're using the default targets, then we have an initial target at let me just get this out, at 1100 and 1111. Okay, so we expect it to at least go up and test this level first. Maybe do a bit of a pullback, and then hopefully resume up to do target twos. Now the question from then is what to do from here. So now that we've established a buying opportunity, okay. So there's two trades in this I want to show you. There's a buying opportunity, right? So if you're looking to get long on gold, here's a really good level, okay. For at least target ones, okay. Stops will go down to this level here. So stops will go to about 1068. So your risk reward is probably a 1-to-1, I think. Right. So stops will go about pretty there. So just about a 1-to-1, pretty much risk reward. So it's good enough. So that's the long side of the trade, right? Actually, I want to show you something else. Actually. So assuming that we kind of reverse at this level here, The logical next step is, we're looking at targets around up to there, right? Because we did say before that we were looking for the move to continue up to around these levels here, and then reverse back down again, potentially, or break through, okay? So that's why you can use a Fibonacci extension, right, to measure a potential move to the upside and also a potential shorting opportunity at the top, right? Now, conveniently, you get a 161 extension, right? And 161 is an important number when it comes to Fibonacci extension. That's a reversal signal. So if price does hit that level, we're looking for a shorting opportunity. Okay, that's provided. All right. The key to this is provided that price actually breaks this level here. Right. So this top here, price has to actually break that level and close above it, and then move up, and then this makes this setup valid. So you got 3 trading opportunities. So you got this one up here. So I'll call that trade 3, and then you've got trade 1 here. Right. Right. Now the other trade I want to show you is one that's going to be as early as tomorrow. Okay. What I'll do is I'll delete this first. Okay. All right. It's on the 4-hour. So this is a really good technique I use, which is called Fibonacci failure trade. So basically, what I'm looking for is basically a reversal into some level for a shorting opportunity. Okay, so this is basically the market going up, retracement going back up here. So let's draw that there, going up, down, goes back up, right, and then we get the rollover, rolls over down to this level here, back to previous resistance, now support, and then we get the move back up. Okay, now this is where people get caught out a lot, and this is why I try not to enter, as it reverses, I try not to enter straight away, because that's where people get caught out. So I usually like to let the price do its thing and then pull back, because it always tends to pull back into some level. When it does the pullback, that's usually the safer entry, okay? Because this is basically, all this is doing is really just catching out all the longs, right, or all the shorts, and then the institutions are basically starting to sell, basically, or get rid of the stock, and then all the guys that bought up here are starting to panic, right? So, and there's people that bought into here too, and they're starting to panic and covering their positions, and that's the whole psychology of it. So, what I'm looking for is for a potential move up to around this level here, and then I'm looking to short the market. Okay. Now, if we go for a short there, then we're looking at our risk. Our stops would have to go up here, which is around the 1129s. And initial, if you want to go for a very short position, then you've got already a 1-to-1 risk reward, right? You can sell as it comes down back into structure, or you can look for extended targets down here, down to maybe this level here, right? Personally, I'd be looking for targets all the way down here, actually. So I'll definitely have a position open to be able to catch that potential ride down. And you're looking at already almost a 1-to-4 risk reward. So this one should actually be up here. So 3 trades up, actually. 3 trading opportunities. One there. Actually, there's 4. Actually, there's 4 trading opportunities, but I won't talk about that one now. But definitely interesting times. Like I think what we're going to see is we're going to see, this is going to take about probably a couple of weeks to play out, probably, but see, already got 127 extension right there, so I'll get an initial reversal back and then pull back up. But once we get to this level here, it's going to be really interesting, because I'd like to see what gold's going to do. I reckon once you get to this level here, you're going to start to get some news in the media. You're going to start to hear a lot of things in the media about the economy or whatever the case may be. If it's very bearish, if the economy is very bearish, then we'd expect gold to be very, very bullish, right? But but if they're starting to talk about how good, I mean, if there's a lot of good data out there, I mean, then you're going to start to see a bit of a bearish. Maybe we might not break this structure level. If we could break that trend line, right? If we can break above this, right, and then we'll definitely see some kind of pullback, right? That's normal, right? As long as we pull back and we don't go below this, but instead we go back up, then that's going to be a very strong sign, and we could actually see gold go a lot higher, a lot faster than anyone would think. So yeah, so it's going to be interesting to see what happens. But just a few trading opportunities there, but this one's a very high probability one. So and you're not really risking too much as well. You're only risking, it's 1 to 4 risk reward. So. Then let me just bring up my trade. Gold. Yeah, I've already got it here. So if I enter here and I'm looking for targets down there, so let's see, it's 3,650 pips to 1,000 pips. 360 pips. 3,600. 3,650, I believe, and up here was about 1,000 pips. Stop. So, well, if you're going on one lot, then you're looking at $14 risk, potential reward being $51. Right? I usually trade a bit more. I usually trade at least 5 lots to, I don't know, it depends. Maybe 50, depends. Let's just say 10 for now. So your risk is $150, and your potential reward is $515, right? So it just really depends on the trade. If you've traded this particular setup all the time, a lot, then and you feel confident about this, then you can probably put 50, right? It just depends on what your risk appetite is. If you put 50, then you're looking at 2.5 grand, risking 700. That's a bit too. The risk there is way too high there for me. So yeah. But still, the potential reward is still good. So yeah, so that's just so that's that. So hopefully that will help you out, and good luck. Catch you later, guys.